Hi, guys. Welcome to the show. Tom is off this week. I'm John Logan. I do a show every morning on the TFNN network called the Global Market Pulse from 8 to 9 every morning. Be sure to catch it if you can. Try to cover quite a few bases before the broad markets open. Try to cover what happened overnight in Asia and Europe. And today, my God, plenty of news out there. As Andy and David were talking about Greece and China, I'm going to omit all the rhetoric and the fundamental talk about Greece and China. We're going to get right into the charts and what may be affected by that. We talked this morning on my show. This is really, really amazing how this works out. We talked about the S&Ps and, the gap up, and, we talked about the 2060, 66 area. We talked about if we were going to get stopped out on the short side on that to try to hang in there and possibly re-enter the trade below those areas. That has worked out quite well. And the reason we took that stance, guys, and I'm going to pull up our scanner situation here, and I'm looking at our S&P breadth numbers up top. As we look at the weekly and daily breadth calculations on these odometers up here, as we had gapped up, sure, as the market opened, some of the stocks opened, we got just a hint of positive action on our 60-minute breadth speedometer up here, but the weeklies and dailies never budged. All right, so what does that mean? That means that on a very bearish slant, our breadth speedometers held. All right, now what does that mean? That means that the internals of the S&P 500 on a long-term and intermediate-term basis held as short possibilities for the index itself. So as we look at the breadth numbers, we're going to pull this up on our screen real quick. If you'll notice, and I'm just going to focus on the meaty part of the day here today, this is our daily situation, and I'm going to try to block out our middle ground here. As you can see, we really didn't have any cooperation on the long side with most of the stocks in the S&P 500. That means that our breadth calculations held on the short side, and therefore we were looking to sell rallies in the S&P. Now, look at these now. This is the end of the day. Obviously, we've had some sell-off here all day, and especially in the last couple of minutes of the market open here. Again, similar situation as we had yesterday. Didn't have any cracks in the armor, so to speak, today. Greece is supposedly going to have some new terms, and who knows how that's going to happen or turn out. But the fact of the matter is, looking at our S&P chart, we're going to head lower. That's the bottom line. All right. So the battles that we tried to pick today around 60 to 66 at DMZ with stops above, and those stops above we talked about based on your appetite for risk. We reached a high of 2068 today. I didn't get stopped out, but if you had gotten stopped out of that range, we talked about getting back in the water as we got back into that DMZ and even lower, and that's how the day ended up, very, very bearish. And we took that attitude based on the internals of the marketplace telling us that there was a major disconnect going on in the index itself and the stocks that, or the stocks that comprise that index. So to get away from the scanner just a little bit here, we have some really, really good stock picks going on today from the scanner. We're going to try to cover quite a bit of ground today before we take our first break. I'm going to take a look at the XLF first. This is the first thing I want to talk about. The XLF being the major SPDR financial ETF. And as we look at this is our long-term weekly view. This week we've gotten back down below an all-important number on a weekly, 2450, let's call it. We're closing around 2439. And if you look at our daily, don't want to be away from the bottom of these profiles down here. And in my opinion, with the S&Ps doing what they're doing and the bearish attitude now that we can say that, we can confidently have on the index itself, stops can be put above this 2450 area on the XLF, and the next tranche down on the XLF, maybe around 23.12. I'm looking at that as somewhat of a nice little trading opportunity. In most situations, when you have a market pulling back like this, you want to try to find weak stocks in a market that are hopefully going to, if you're wrong and the market rallies, you're going to be able to not suffer through as much, pain, if you will, if the market does go north. And those stocks have showed their hand ahead of time, and that's kind of what we're looking at normally in a relative strength trading system. Got somebody behind me working. So anyway, let's take a look at some of the stocks in the XLF that we want to take a look at here. Let's take a look at Goldman Sachs. All right. So we've had the XLF pull back. This is a first weekly profile that we're looking at, a new profile. The unfair lows on Goldman Sachs are 204.28. So 204.28. And closing price today was 205.30. I guess the stock's still open a little bit after hours here. So, is this the type of stock you want to short in the XLF? The answer is no, because we're coming into the bottom of a profile, which is now at 204.28. We've hit that and kind of bounced up a little bit here. Here's the daily situation. I know we're getting below profiles here on our intermediate term, but remember, weekly takes precedence over daily, and Goldman Sachs, considering that the XLF may be a short at this stage, is not the candidate within the XLF that's shown its hand very well from the short side. What I want to do, and the reason I picked that out, is I'm going to go to our ETF section in our scanner, and we're going to go to our daily view here, and we're going to look at the XLF. We're going to click into that, and we're going to try to find candidates that are actually showing weakness in the XLF. So I'm going to do a sort, and I'm going to do a sort that says, show me stocks that are trading below profiles on the weekly and the daily. And I'm going to only show matching results here. And what we've got now is we're showing Aflac, Allstate, American Express, Franklin Resources, Berkshire Hathaway, Comerica, a couple of other, Lowe's Corp, T. Rowe Price, which has seemingly been on the short list forever, Weyerhaeuser Corp. I'm going to look at Weyerhaeuser, WY. So if I'm looking at the XLF and I'm thinking that the market's going to come down and I'm thinking that the XLF may start cracking, I want to find stocks that are showing weakness to try to take advantage of this, that hopefully will be an easier ride down. And there's Weyerhaeuser. We're going to come back and talk about this after the first break. Hang in there, guys.